If you are a little bit confused about the impact of recently passed tax reform, you are not alone. The new legislation is bringing a raft of changes. Justin Halverson from Great Waters Financial here today to help guide us through these uncharted waters. It's good to have you here today.
Always great to be here.
A lot to chew on. So let's go first to individual tax cuts.
Yeah, so the main thing here for a lot of Americans, it's going to lead to a pay raise. 5 of the 7 tax brackets got cut. And so for the average American, they estimate this year it'll be about a $4,000 annual pay raise. So good news for most people.
State and local tax deductions have been eliminated. This has created a lot of concern.
It has, especially here in Minnesota, Pat. So the combination of your state property taxes and income taxes to be able to be deductible is $10,000. And so if you're above that, you're capped at $10,000. As we know, Minnesota is a fairly high tax state, so it hurts us more than other states.
Next is actually good news for many, doubling of the standard deduction.
It is. So they eliminated the personal exemptions, but then they doubled the standard deduction. So overall it's good, and overall it should simplify for people. No more saving receipts, less itemized deductions. You'll be able to take the standard deduction.
Good news for families, expanded child tax credit.
$2,000 per child. For me, with 6 kids, boy, that works out pretty well. And so that works, you know, if you have children, take advantage of that.
What about the student loan interest deduction? A lot of folks have those loans still.
Well, some of us thought that was going to be taken away, but it's still in the plan. We're still able to deduct that student loan interest up to $2,500. However, if you start making too much money, they'll phase you out and take away that deduction.
No ACA or Obamacare mandate for individuals, so not being required to have insurance.
Correct. However, it doesn't start until 2019. And so for 2018, you still need to have insurance, or there still will be that hefty fine. So that starts in 2019.
Increased exemption for alternative minimum tax. What is that?
Well, the alternative minimum tax is very confusing, often misunderstood. If you start itemizing deductions and you think you're going to lower your tax bill, the alternative minimum tax would creep in. They eliminated that for corporations. So good news for companies. How about us for individuals? They significantly increased the exemption for that. $500,000 for an individual filer, $1 million for a married couple. So unless you're above those income limits, no more A.M.T.
So a lot of people will be getting those W-2 forms. All that's coming in at the end of the month. Businesses like yours, you've spent really the holidays getting geared up for this.
We've gotten geared up for filings for this. You know, that'll happen in April.
Yep. That's
still going to be under the old rules. But going forward for next year, some tips right now. If you're a giver, maybe bulk your giving into 1 year and then use a donor-advised fund or a charitable remainder trust to give that out over the coming years.
Always important and good advice. Justin Halverson from Great Waters Financial. Good to have you here. We have posted this information at KARE11.com. Look under the 4 p.m. show page for details.